to another Ask Me Anything session from the Rapyd offices in Tanjong Pagar. I'm Joel Yarbrough. I am here with two very, very illustrious members of the fintech community and frankly the long-standing members of the payments community in Singapore and in Southeast Asia. Before we get to introductions, if you are hanging out in the virtual map, we're once again in the Boat Quay area. You can find us here all week. Format of these sessions are Ask Me Anythings. They're intended to be relaxed and interactive and will be made better by audience participation. So if you do have questions, please put them in the chat box and I will try to get to them as we go along in the next 45 minutes. So I'm here with Jeremy and Jeffrey from Liquid Payments and from Nets and an exciting new venture called Grablink respectively. So let's get started. So you guys we've had a week of very illustrious payment executives, but you guys might be hitting new high bars in terms of experience and perspective on the market. So I think we can maybe unearth how we got to where we are today in 2020 and then go from there. But before we do that, if you wouldn't mind just introducing yourself and your current role to the audience. Jeremy?
Sure. So I'm the founder of Liquid Group. So we're a liquid payment services company, primarily on cross-border payments. So we do a couple of things. Our main thing is C2B, QR payments. So obviously, with COVID, cross-border is not the best thing to be doing at this moment. But still, we have been integrating around the region. I think the most exciting thing for us for the last, 2 weeks really was entering FAST and Pay Now in Singapore. So that's a big milestone for us. So our big focus is in payments, cross-border payments, and we look forward to 2021.
Awesome. Yeah, and we'll dig into that, I think, very exciting announcement in a minute. And Jeffrey?
Hi, I'm Jeffrey. Right now, I'm the Managing Director for Grablink. We're supporting Grab in the regions in terms of payment infrastructures. So we are connected to all the payment gateways. Prior to that, we are involved as a CEO of Nets. I'm involved in Pay Now, FAST, and all this to drive Singapore towards a cashless society.
Right. And I think given the huge role that you played at Nets and that Nets has played in the maturation of the region, I mean, maybe just to start with, what do you see as the current state of payment infrastructure in the region?
Yeah, so I think the current payment of infrastructure is especially focusing on the instant payment in terms of cross-border. As you read in the paper today, this morning, right, the connectivity between Singapore and Thailand, as mentioned by our Deputy Prime Minister, Heng Swee Keat, that these both countries are connected, and we can see later part when we recover from COVID-19, the travel industry will slowly pick it up, and I think the ability to cross-border using e-wallets as a form of payments will be there.
What do you see as the business model challenges to that, particularly if consumer payments through real-time bank payments becomes popular? Does that become a challenge for the incumbents?
I think for the incumbents, the business model has to change and transform, right? Traditionally, we look at Visa, MasterCard. I think there still be the traditional main players, especially in travel sectors. But I think that the e-wallets are gaining strength, especially in the micropayments market, especially at the roadside. Like you go to Thailand, for example, PromptPay QR is almost everywhere. Come to Singapore, SGQR is almost everywhere in the hawker centers. So I guess slowly, they are replacing cash for small micropayments. But for the big payments, I think it's still some time for these e-wallets to take place.
Right. And then, Jeremy, I mean, you have stepped in to try to bridge a lot of these infrastructure gaps in the past. What would you say is the current state of the infrastructure and where are the weaknesses today?
Yeah, so if you realize the current infrastructure, it's been around since, I think, the 90s. So what happens is that every market itself has now built up their own domestic real-time networks. So these are the next generation payments infrastructure. The problem is that they're not connected around the region. So I guess that's where the next leap will be, whereby how are all these markets going to connect? We're talking about easily 50 to 60 individual networks here. So I think the PromptPay, Pay Now integration is a nice, wonderful first step. But there's a lot more to go. So I think that infrastructure is the next generation real-time payment infrastructure is going to be the next big wave of integration in terms of region. And I think that's very exciting to see. And let's just see how this evolves because business models have to change. The whole concept about how transactions will move has to change. I mean, it impacts every single thing, B2B, B2C, C2B, P2P, everything is changing. So, but obviously the building blocks are there. But how it finally lands will be something that all of us are in it. So we are going to be excited. Some of us will be followers, some of us will be leading how it evolves, but it's going to be an interesting, 3 years really.
What's the current role, would you say, of subsidies in driving transactions at this point? And obviously we started in one spot and it's changed, but what's the current state?
I think for the faster payment in Singapore, government is heavily subsidizing it at the moment as to gain some strength. I believe that through time, consumer will slowly pick it up, right? There will be some cost, but I think the cost will be very small, right, per transactions as compared to maybe the traditional scheme cards and all this. But I guess driving towards cashless and contactless payment is going to be the way to go.
Right. What about on the, called the issuer side, but the wallet sponsor side? Is there still ample subsidies in the market, or are we starting to see merchants actually pay the real cost?
Maybe Jeremy?
I think the subsidy is coming down. I mean, realistically speaking, when wallets first started, I think I mentioned something on a panel yesterday as well. One of the biggest costs for wallets is the cost of top-ups. So with the real-time networks coming along, or at least the domestic networks coming along, I think that should go away. We do see newer companies coming along, and they go through the same playbook. They're trading margins for volume. It's an interesting model, but at some point in time that can't hold. So there are different players on different stages of their development. So I would say the more mature players are starting to monetize the whole entire ecosystem. The ones who need to gain market share will now, obviously there's still some subsidy. But at the end of the day, I think wallet is just a wallet. Payments is a service. I mean, nobody wakes up and decide, I want to pay for something. Right? They want to buy something,
Yes.
Then they choose the instrument they want to use to pay. So we'll see. I think it won't be sustainable if they continue subsidizing payments, especially on the retail space. So in a good way, the market will come to some kind of equilibrium. And it's healthier in the sense for the ecosystem, for the stakeholders, and for the merchants as well. I think this is a very healthy development.
What about from a technical functionality standpoint? Do you see prompt pay, UPI, pay now as being technically equivalent at this point, or are there still functionality gaps between them that should be normalized in some way? Remembering you're on TV, of course.
Wow. They are different. We integrate to all three. From a message formatting difference, obviously everybody is different. They all follow EMV standards, so there's a fixed format. As the core providers are similar, actually. We won't mention names. So I think they are more similar than we think, but standards are a little bit different. The fields that they use are different, but all these will be harmonized in the months to come, or even the years to come.
Yeah.
So there isn't any significant gap, I would say, from a technology platform perspective. But where they want to go and how they evolve, what they focus on, which fields they use, I think all these, what we call operation regulations, needs to be synchronized, harmonized. It's fantastic in the sense that it's not the technology that's the issue anymore. It's the operating regulations, the policies that they put around it, and that's actually harder. Compliance. Who's in charge of the AML? Or everybody is, but at the end of the day, data transfers. So it's the human side that will probably take, not the policy side, that will probably take longer than the technology side.
Yeah.
And yourself?
No, so for me, I look at the various countries, right? They have their own regulations. Like Singapore is the forefront of some of the regulations, and the rest that other countries like Malaysia, Philippines, Thailand, they are setting up their own regulations. Either they are tougher compared to Singapore, right? Singapore is more open in certain ways. But like in Thailand, I think data protection is very, very key, right? In the way that the data can't leave the country. So then again, we look at India and all this, like what Jeremy has mentioned, that most of the payments in terms of the e-wallets, the standards for QR is driving towards some common space. But however, that the in-country regulations may affect some of the ways that either money transfer is being operated, right? How do you do a cross-border transfer between two operators, right? And whether do you need a custody account, do you need to put up some guarantees and so forth? I guess this will take some time to sort it out, but just a matter of time. Maybe I say within the next 24, 36 months, you get more clarity going forward.
Given how, 50-year history for the card schemes solving this exact problem, how do you see them evolving to try to compete with real-time bank payments or proprietary rails?
I think the scheme cards themselves, like the international scheme cards, they take 50 years to be where they are today. All right. So any cards that you travel around the world can be accepted at almost all the establishments because they have drive towards a common standards, common platforms, and especially the routing is based on the ISO standards, right, of the 16-digit and so forth. Whereas the e-wallet space today are, learning, right? So a lot of creativity, innovations in place. So it's a little bit messy, but like what Jeremy says, down the road, there will be some common features. Down the road, maybe we will learn something from the schemes, right? How do we route across the world more efficiently? Today, I think there's a lot of translation between one e-wallet standard to another e-wallet standard. That's why I think Jeremy has done a great job combining them together and then do all those translation, mapping of fields. That's not easy. Yeah.
And what about in the state of maybe local interoperability? Because when I think about Visa, MasterCard, and I wasn't paying enough attention in the 70s to tell you, but to some degree they were forced to allow common acceptance, right? I think they were forced to do it and then they embraced it and it became a great strength because then they built the network together.
Yeah.
Right? That's not really exactly where we are in all markets here yet. Would you say that that is something you expect to see in all markets? Or will we still have a fractured acquiring and a fractured acceptance landscape?
I think the good point about ASEAN, especially with 600 over million people, with the government coming together, especially the central banks themselves, they meet regularly in terms of the WCPSS, right, the working group committee that's working on these payment and settlement systems. They are driving towards some common features so that wallet users in Singapore will not have any issues to use it in Malaysia or to use it in Thailand. I think they are driving towards that goal ultimately as an ASEAN economic community.
Actually, I also weigh in terms of how you say scheme and domestic networks as well, because essentially there's a different fundamental business model in terms of how they do. So real-time payments domestically, they're very good for moving money real-time in countries. And once they start, as what Jeff was saying, whether it's an AEC level, regional level, APEC level, it's all about moving money on the basis, what's the fastest way to move money. So from a cost angle, from an infrastructure stability angle, those guys will be it. I mean, they're going to move domestically and cross-border. I think Visa, we have to view Visa and the schemes as they are not just, they don't just move money. They don't actually just do payments. They are also marketing demand generation players. Yeah. So in that sense, one is a very efficient, low-cost model. One is actually coupled between efficiency in terms of the costs to do it, plus they have, there's interchange, there is marketing programs. They partner with all the issuers that create why you spend, the need to spend. Well, not so much of a need to spend, like why you spend. So those models will intersect. I don't think any of the national models will adopt that because it increases cost in the system.
Yes.
So on one hand, national models will become as cost effective as you can get, whereas the schemes of this world will embrace and probably own the space. It says but with us, we will create the ecosystem and the model whereby the banks will participate. They have enough margins to run promotions and demand generation. And I think that two space, having these two infrastructure side by side is effective. I mean, if low cost fund movement is what you need to do, there they are. If it's more marketing, more payment, demand, driven, or incentive driven, I think the schemes will still dominate. I don't think the national networks will go there. It's too marketing related.
Right. What about missing value-added services, recurring payments, right? It's a missing value-added service. Most QR schemes don't offer access to credit at this point. Do you see those as things, those are more squarely in the space of the card schemes.
Yes.
Do you see those being added in the near term or are the incentives wrong in some way?
You see, that's where the strength of Visa, right? So the big schemes, they are single nodes. While it's difficult to perpetuate to all their members immediately, they have a central decision-making body. Well, at least, right? We're talking about, they should, but they do actually. So, but I mean, compare and contrast to 10 ASEAN countries. If you take the northern three, China, Japan, Korea, and China, you throw in UPI, you throw in SEPA, and then the Central Eastern Europe networks, including the Northern European networks. You see where this is going, right? You have the real-time networks, PIX in Brazil. You have Cody in Brazil, FedNow. So in that sense, all these features, there has to be some kind of standardization. It's not just installment based. It's the pure fact is how do you do refund and voids in real-time payments?
Yep.
That's That's the big question already. And how do you actually do daily settlements? How do merchants reconcile on retail? So all these things, Visa has got this all sorted. They've been, the market leader. They set the standard of what retailers expect. So it's not easy, but like I said, one is meant for large scale, stable, not low cost, that's a bad way to say it, but efficient money routing. One's literally catered for payments, literally for the comfort of the merchants and the card users. So I think national networks will get to the point where they can, but it's going to take a while. Well, not long, but they will take time.
Yeah, I assume that that's a big part of the role that Liquid is playing, and that's certainly part of the problem we're trying to solve for is how do you make this unevenness even from a merchant acceptance standpoint, so the merchant doesn't have to think about things too differently.
It's more of an advocacy role than also what we call, I won't use the word lobbying, but presenting how we think things should be doing and trying to convince every national network is like, you can go your own way, but this is what everybody else is trying to get to. And playing in a sense, trying to do information sharing as we all do, and trying to get everybody on the same page. And it's interesting. It's interesting.
It is.
Yeah.
So how does that change with, and I don't want to be a CBDC necessarily advocate or say how it's going to roll out, but how does that change with digital issuance of currency from national governments, right?
Yeah, I think we're still at the initial stage. Of course, MAS is taking that lead right now, right, to be at the forefront of even digitizations, right, of those currencies, right, that we look at. Because as you know that hard cash today, right, printed notes, coins, and all this, cost the Singapore economy close to about 2 billion, right? There was a report done some 10 years ago. So to drive to some of these digital and contactless payments and what we have is that I believe part of those cost savings can be translated back into subsidizing the so-called infrastructures that we have been building for the last 3 years in Singapore, especially the QR payments across the hawker centers and the region in Singapore as a whole. So I believe that part of those savings should be used to promote part of the contactless payment. As for the digital side of the issuance, is it going to disintermediate the banks? Because the banks are the holder primary of those accounts. Does the people now directly access, to the digital issuance? It means bypassing the banks, right? Going to the central bank direct. That one, I'm not too sure how it's going to go, but there seems to be like a tendency to do so.
Actually, I would think that you got to go back to why this exists, why this stable coins or the government issued a blockchain-based currencies actually. I think I tend to look at it you look at the Board of Currency and Coins, or basically the people who issue cash and coins. So I think the governments are trying to move away from that perspective. Is if you realize we're talking about printing notes and minting coins, right? So this is the next generation. So this is the stuff that's coming, and everybody's got a mobile phone. Yes, so well, not everybody, but that's where we're going to hit to. And effectively, the target is to get rid of cash and coins. So I think if they get from there, and at some point in time, as Jeffrey has mentioned, then the ecosystem has to develop. If they think that they are just cash and coins, would it replace all forms of payments? I think that's a bit too interventionist. I don't think governments will head down that way. I don't know, it's a guess. But eventually an ecosystem will be created. They are treated like currencies. They will be able to be put into players' wallets, just like how people top up cash. So you can top it up there. I think the features and functions and what you can do with it will still be built by the private sector. Right. But I think the state or governments will take a very, very active role of issuing. But their purpose was to get rid of cash and coins.
Yes.
And how it interacts into bank accounts and the wallets, that will still, I think, will be the discussions in the months and years to come. I don't view it with that much fear or anything. I view it as this is a natural evolution from cash and coins. It's just that how are you going to roll it out? That would be great.
Yeah.
So then, and tell me if you don't want to define it for us, but then what's the role of Grablink, right, as a large ecosystem building some level of infrastructure itself? What's the role that it's playing?
So for Grablink, right now we are basically establishing a payment infrastructure for Grab in-house, right, serving Grab as a utility. So in terms like, for example, just now you mentioned you take a Grab right to your office here. So there's a transaction that's just been processed at the back end. So we will handle those processing to the schemes, right? So similarly, then how do we drive towards cost efficiency. Today, we are connected to almost all the payment gateways that you mentioned out there, like for example, the big ones like Adyen, Stripe, and all those. So we are connected to them, and we are seeing that how can we now, at the next stage, move into some of the what we call externalizations. Because what we can do is to drive the utility, the cost per transaction to the lowest possible. So then how can we now offer to the Grab merchant side of things, right? To help them to lower their cost of doing business too. So we are coming from the angle, right, as to achieve cost efficiency for not only Grab, but also for Grab merchants as a whole.
And does that imply that you'll be clearing more transactions effectively internally, right, within the
Yes,
network?
we initially built for our own ecosystem within Grab, but we feel that such a powerful payment settlement and processing system that we have, we can also extend it to our merchants that's out there to drive the utility costs lower. And in that sense that we are covering 8 countries in this region, so there's still a lot of what we call them micro entrepreneurs here in this region. You look at countries like Myanmar, Indonesia, Thailand. So we look at those countries as potentials, right, that we can empower them for electronic payments. Yeah.
And to what degree do you feel like the job is getting close to done in terms of empowering, whether it's Warungs in Indonesia or hawkers here, to come online? Where are we in that journey now?
I think as tourism recovers, I think that acceptance of electronic wallets across the region will pick up, right? Especially like the Warung in Indonesia or the hawker centers here in Singapore, for example. Now they are getting acceptance, right? They themselves, when we started about this journey 2 years ago, the hawkers were not too sure about that. But in recent times, as you see, the COVID situation accelerated the whole momentum. So they realized that having contactless payment actually improved their productivity. Last time when they cook, they need to change, right? Take the dollar bill, give you some cents back. Now they just continue cooking while they're looking at a transaction coming in. So that improved their productivity. And then for those that in Indonesia and Malaysia and Thailand, across this region, I think cashless, especially the e-wallet space, is going to pick up very, very fast, right? So long that most of them are armed with a phone right now, so transaction can occur right in front of them, right? Collecting cash, sometimes they still have to go banking, right? If they have a bank account, if not, they'll have to buy something at the day end. But with more acceptance across the region, especially Thailand did a very good job. Malaysia and Singapore is not far behind too. I think you can see a lot of take-up rates on this.
I think the penetration to, like you say, the unbanked or the nationally not typical credit card merchants, it's going to be a collective effort. So there's a couple of things that we think will happen. The wallets will play a role. And the national governments will put these wallets into national switches. So to create interoperability, because else it's going to be a big mess, especially as you get further out from the cities. So it will be a collective effort. I think a lot of wallets and banks will open bank accounts, e-wallet accounts for their customers, as well as sign them up. But they do it as part of the whole community. So if all the national, we see that as every government moves ahead on their interoperability, as wallet expands, we will have bigger penetration in a very, very short period of time. So it's fascinating that how competing wallets end up working for the same goal.
Yes.
Right? So when you have a lot of wallets in the market, obviously maintaining stability in the individual ecosystems, but then at some point in time, they will all be bolted into a national switch. And when we're looking, we get this sense from all the regulators. It says, great, good job, you sign up 1 million merchants. Now we're going to bolt you in, your 1 million merchants is open to the rest of the world. Yep. But it has to be that way, else you're going to have very, very confused users. So it's a great thing. So the wallets lead the way by initially opening it, and then the regulators bolting everybody together, and then all the switches literally interoperating together. So I think it's a cascade of steps. Everybody plays a different role, but if you see from a big picture perspective, it will hit, it is hitting critical mass actually across Southeast Asia. So ASEAN itself will rapidly catch up to the penetration that the Chinese have achieved, and I think that's to our credit. Huh? I mean, 10 different countries, and we in our own strange way, everybody's headed to the same direction. Right?
And so if you've got a national switch, you've got least cost routing, I've now acquired 1 million merchants and now they're being turned over to the competition, right? So I've opened up acceptance to everybody. Does the business model collapse for someone who's been trying to attract merchants at this point?
I think the smaller e-wallet players will have to find their way, right? The bigger, more established ones, I think they will lead the way. And with digibank coming up across the region, the reaching out to the millions of unbanked customers that previously was not able to access because they need physical branches. With digibank and the 5G coming up, right, everyone would, I believe, will have a handset, right, in a way or not. So with digibank, the way they onboard customers are quite different in the way their top processor, right? The KYC process is much faster, for example, like how you talk about Stripe onboarding merchants, right? So have changed the way of how KYC has been done. Traditionally, it takes almost a month to onboard a credit card merchants. For Stripe, it's just within minutes, right? So I guess KYC can be done in a better way, right? Not that you totally ignore them, but you need to say how to use technology to enhance the KYC. With today a lot of digital signatures, like for us in Singapore, we have our so-called SingPass tokens and all those. Look, everything is all connected right there, right? So with the recent fin development that we have here in Singapore, that you don't have to be a bank, right, to bank with the bank to get an app, but you can get access to the accounts and in terms of balances from the other banks, right, from another bank app. So I guess this openness promotes a lot of innovations, and I believe in a very short time, in countries like Myanmar and Indonesia, you can see millions and millions of people will be onboarded through digital means. Yeah.
So, as you mentioned, no, I don't think the business model will be compromised, but it requires them to really think clearly what is their business model. So if their idea was to sign up, like you say, 1 million merchants, and now it says it's now open to everybody, but isn't that better? Because now you have more people who can, access that 1 million merchants that you have signed up. So if their business was in acquiring, that means getting as many merchants as possible, being part of a whole national network or regional cross-border network, it means more people can access it. So it's good for them. At the same time, but if their model was to actually say, we needed this 1 million merchants because we wanted to do something to them. We wanted to lend them money, we wanted to do cash management, we want to do cash. Then great, then you have to conversely look at the fact that you have now accessed another compadre's 1 million merchants. So you can enter that site. So I think every division wins, but I think it depends on how every entity views what their business is really. If you have an acquirer, this is great. I mean, at one go, your 1 million merchants now can accept everyone. So it's good for you.
But is the problem for a small business really payment acceptance, or is it underwriting, access to credit, and other things, right? So are we solving for that problem, or is that still an unsolved problem?
And so there's two components. One's acquiring, and the other side, the people where do financial loans, SME loans, and then what consumer is consumer. Yeah. So that's the other element. But you got a good point. I mean, as you go into to rural financial inclusion, liquidity or loans to go into the more extended base out of the cities, I think that's still something that has to be handled. But that's into lending. So naturally, every regulator is a little bit more careful.
But isn't acquiring fundamentally lending, right? Very short term in some cases, but still a credit job.
I think with today's technology, you can look at the transactions of the merchants or the person or the individual. And with that, I think if you take some risk in terms of lending, you can power up the whole entire what we call micro entrepreneurs or micro merchants, which previously don't have access to some of the credits. So because, like you just now say, acquiring, right? So it means part of the money is you can use that as a factoring, right? And factor his maybe 2 times of his daily intake so that he can do a better business or bigger business, and slowly you grow from there to a more established merchants, right? Or more established client for the banks to look at in a
So if you look at, and you mentioned digital banking, we both mentioned digital banking. So as you see this new wave of digital licensees in Singapore, right? And the trend is, let's call it a trend across the region. Do you think some of these new entrants with their access to data, their data processing capabilities, large engineering teams, are they actually going to swamp a lot of the existing incumbents, or will the existing incumbents be able to keep up?
What I'll say is this, obviously them entering the market will make an impact. Yeah. So I think if you look at it very clearly, obviously banks, and I don't want to say it's from a Singaporean context, but thinking it from a regional perspective, if it doesn't matter why did they try to get in?
Yeah.
If it doesn't matter, why are the banks commenting about it?
Right.
So let's call an apple and a spade a spade. These guys are the new banks. They're coming in. It will make an impact. So saying that they're not going to make an impact, it's a little bit flippant. For the little banks or the new banks saying, I'm just gonna come in and poke around and not be disruptive. Well, you got to take it with a pinch of salt. So there will be an impact. I think from the incumbent banks, there will be people who fare better. There will be winners and losers. I think not all banks are created equal. I mean, we don't use bank as a general term. Banks have quality as well. There are certain banks that are a lot better than others. So there will be the winners, there will be losers. And even for the digital banks, each of them come with different skill sets or at least advantages. So, again, their outcomes will be different. So, I mean, I can say this a little bit more because I didn't apply for a license. We work with all the local as well as new banks, as I would say. But the sense that we get is it will make an impact. That's why everybody's doing it. By denying that it will have an impact is just a little bit tone deaf, right? Both from the incumbents as well as the challenges. And all we'll say is that there will be winners and losers, but it's better for the whole entire economy, right? Yeah. I mean, things get more efficient, it is a healthy step, really. I mean, when were the banks incorporated? Any bank in any part of the world is 40 years ago. That's how long they've been around. That market hasn't changed for years. So this is the one time in the last 50 years it is.
Yep.
There will be impact. They can't deny it.
I think for the banks themselves, they have been sitting very comfortably for the last 40, 50 years, right? That's what Jeremy said. They have been predominantly looking at the 50 percentile and above, right? Those markets, into even the SME themselves, they've been doing good business, right? The bottom 50% is, I would say, underserved, right? Access to credit is difficult. Doing some of the businesses with the banks is also very challenging because they may not have a credit history for the SME and so forth, even for personal, right? So to build up that. So with the DG Bank coming in a sense that maybe they want to look at how to better serve the customer as a whole, right? They are not talking about attacking the traditional banks at the top, right? But they are looking as a whole, how can they change the way banks are, right, operating? What is the thing that, like, say, for example, development bank or the import-export bank in those developing countries, right? Accessing to those credits and all this history. Maybe the DG Bank can serve in a much better way because of the cost efficiency method that they are using a lot of technologies rather than human. In that way, maybe you can see the whole economy will be really changing in a way for the maybe next 5 to 10 years because a bank, like even the DG Bank, will take a couple of years to set up, right? So before you can see any impact, that will be 36 months down the road. But I think definitely they will change.
Do you see enabling approaches like EKYC and being fully digital in your onboarding, et cetera? Are those self-imposed constraints for legacy banks, or are those real constraints that regulation has to change?
I think the EKYC I only can say from Singapore at this moment, we have very good systems and infrastructures, right? And then the open APIs that the banks can tap into. Even for us, if you do merchant acquiring, you can tap into the EKYCs, right? For the KYB, we call it, right? For the businesses. So the ACRA, the APIs are there for you to tap. And then if you are a bank, you can tap into, I'll say, it's the credit bureau. I say with all these functionalities that's available, EKYC now is a breeze actually in Singapore. Yeah, I don't think it's a constraint by the banks not to do it, but then I guess some of the processes has to change.
Yeah. They're saying that just to jump in on this one, they're saying that why do you do a certain thing a certain way? And the answer has always been, and the answer becomes, because we've been doing it this way for the last 30 years. Right. I think that encapsulates this whole entire process. So the most regulations that we see, and this is something that we didn't realize until we started daggling with regulators as well. Then we realized that they're not that prescriptive. They don't tell you exactly how to do certain things. They come up with what's the outcome they want. But when you go to banks, they realize, well, that's not a criticism because that's the best way to do it for many, many years. And so EKYC, how people do onboarding, how they do screening, how's the automated way for their sanctions or AMLs, fraud management. So there are different best practices that has been accumulated along the years. And because it's been so long, the best practices are, quite thick. They are, depth in volumes. So obviously when the fintech comes along and says, I'm going to do it this way, it looks different, but do it achieve the effective outcome? And I think that's where I think depends on how the regulators are. I mean, the more confident and open-minded regulators would tend to take a good look at what the guys are doing and says, go for it. And there you go, that's innovation coming in. So I won't say that what the best practices obviously have a reason why it's accumulated over the last 30, 40 years. The banks obviously learned along the way. So that lesson has to be taken across. But yet at the same time, you cannot downplay the fact that technology has changed. But if the effective outcome gets you where they want to go, I think that's definitely worth a look.
Right.
Yeah.
I personally always find it a little bit funny because historically and certainly in the United States, branches equal deposits, right? Because people with a lot of money want to be able to touch and feel, right? No matter how easy it is to open an account electronically, there's still a significant role for the branches, right? Yeah. So to the degree that digital banks have, the advantage of lack of incumbency, they can think about new models, et cetera. Yeah. They still need to make money, which means they have to lend. In order to lend, they need deposits, right? So that the question becomes, do large depositors change their behavior or not? And I think that's totally an open question still.
Yeah, it is.
Yeah.
But you see, time moves. So if we take a snapshot in 2020, the user base in a certain market is obviously at a certain distribution, right? So there was this conversation with a bank, not in Singapore, but overseas, they're saying, even if they digitalize, their client base is not of, the younger generation. So they can spend $1 billion digitalization, it's not going to make a dent in to their existing customers. But then you have to look back or look ahead, but in 20 years' time, where are your customers?
Yeah, you have to lay the tracks for sure.
Right. So it's a balance. So like where we are today, and we have to see where we're going to be in 10 and where we're going to be in 20, and the banks have to look ahead that way. So that's the key. Yeah.
Yeah. So just like 20 years ago, we talked about internetcommerce.com. Today we talk about social commerce, right? So maybe 5 years later, we talk about social banking, right? The way the young ones that are coming up, they are heavily being tapped onto or connected into the digital world. So everything that they feel, everything that they want is instant gratification, instant banking, right? Instant transactions, right? Instant happening. So I guess like 20 years later, you see these are the groups, right? That they are coming up. These are maybe the bank's customers. I won't use it whether digibank or whatever, right? These are the bank's customers. How does the incumbents reaching out to them, right, digitally? Social banking, I think, is going to come.
Right.
Yeah.
So if you look at the fintech, maybe to zoom out a little bit, if you look at the fintech community over at large, right? Well, first of all, fintech, is it a thing or is it financial services, and how would you define it? But do you feel like it's overhyped at this point? I mean, everybody's come in. Both of you guys have a long trajectory in the industry.
One of the thing about the development of technology is that the ability now through the connected world, the datas, right? The datas are the key. So with all these datas, whether be it from Facebook, be it from all these social medias and all this has changes the way consumer look at things, the way they do procurement, buy things off the net, the way they interact with the banks, the way they interact with even the home-based learning, right? So that has really evolved with the broadband availability over the last 20 years. The speed itself is tremendous. I think it's not a hype, right? I believe that not just on fintech itself, but in a lot of technology space, right? Be it the way other maybe travel tech that we look at will be different. It will be impacting a lot across all the spectrums of business, not just financials.
And you mentioned 5G a while ago, right? How do you see the impact of COVID and 5G accelerating that curve? What's going to change?
I think for 5G, the younger generations are looking at is that I want it now, right? My daughter that day was just complaining that our home base, the broadband is slow, right? I said, what? I was just doing fast.com and check. It's 150 megabits per second. She said it's slow. She wanted fast, right? Especially downloading of things. So I was like, okay, but 5G is like, I think 10 times better than the 4G technology, right? So I guess this, in terms of weighting, is not the word that the younger generations are looking at, but 5G carries a lot of tremendous potential. Like for example, up to the second, right?
Hi,
Where
yes,
you
loud and
are in
clear.
terms of even in Singapore, the parking.com that we have in that app. Next time, because of the technology, we will just sign it up. So long you can see the vehicle is parked there in the spot, which means that it's stuck, right? Rather than me having to activate. So there's a lot
Sure,
of
no problem.
innovations that can come from 5Gs. Yeah.
Thank you.
I think I'll make a provocative statement itself, right? I think 5G is going to kill the card. So for card payments, you're not connected. So 5G is about the always-on framework. So a card is static. It's an NFC at best.
Yep.
And it's this little chip that you have there, 6K, 16K. Wow, the best you get is, I don't know, 64K on a chip card, right? So 5G effectively kills that form factor. It doesn't kill the card companies, huh? It kills that form factor.
Yep.
And it moves on to mobile. So in that sense, as a 5G ecosystem matures, as the data-rich environments, the always-on environments get more, innovation will build on top of it.
Yep.
And the propositions, the user case, the user journeys that will come across, it's going to be, cannot be replicated on cards. So 5G will just move things digitally. I think, and it's not a revolution. It's an evolution.
Yep.
It's the card companies or the payment companies will move on to 5G. It's not for the sake of technology. It just happens that this is what we're going to do, and 5G enables it. As opposed to a lot of this is 5G, and everybody's trying to figure out, okay, what can we do with it? So it's a bit of a difference. So it's a more healthy evolution from payments.
So then what is the implication for data privacy and personal privacy? Is it gone?
It really depends on frameworks need to be in place. So at the end of the day, data has to be exchanged in any shape or form, right? In some shape or form. So I think it's about the trust factor in all the jurisdictions that this is done. Whether you're talking about GDPR or you're talking about Singapore's PDPA, there will have to have a certain degree of data exchange, definitely. Cross-border, I think there's a major conversation on this, whether there's going to be data localization. I think at the end of the day, technology is, at the end of the day, will have data exchange. I think it's a framework that has to be adopted, that has to be accepted by all the data players. So sometimes we see, we can't blame the regulators, right? Because we have companies saying, I don't subscribe to that. But yet at the same time, regulators have to be very, very mindful of data sovereignty as well, because if everything is zoned up, it's very, very inefficient. So there needs to be a balance. But this is a big question, so yeah, it's...
I think the data exchange, I just think about travel, I think about passport, right? Every country you go to, you present your passport. Those countries are taking on your data anyway, right? Whether you like it or not. Your date of birth, your name, your nationality, your place of birth, everything, it's all there, right? And whenever you travel to another country, they will suck the data. And how they're going to manipulate and use those data really is within the country, right? The hotel that you stay, they also scan the passport. Now the data is fed back whether to centrally to a place. So you've been giving data freely all the time, right? So now is that how do we use the latest technology, tokenization, right? What can you give, what can you not give, right? And today you go on the social media, you go on to Facebook, you go on to LinkedIn, you go in. I think within the next 5 minutes, I have almost a good sense of how Joel, you as a profile, right? Your person, where you graduated from, your school when, and so forth. It's all there.
Yeah.
Right?
I'm wiping my phone.
You're wiping your phone now.
Yeah.
Absolutely. No, I think that's the question. And so you mentioned, I don't think we have enough time for it, but then the data sovereignty, does that become a constraint on growth at some point, right? Every nation has their own data domicility and data portability components. Does that really start to slow things down at some point?
There's a lot of conversations that go on. So it depends on how fast the bureaucrats are, how comfortable they are. But as Jeffrey mentioned, the only data that you have proprietary is of someone who has never left the country. But the minute they step out, I mean, it's a fool's game to say that, you know what, all the information cannot leave the country. It has to, not, it's bilateral. You have to respect how it works.
Yeah. I think next is that the ethics, right, and the values around the protection of data, just like the way AI is being used today, right? I think the government are looking about the ethics, right? What you can use, what you cannot use. Yeah.
Sounds good. Well, with that, I think we don't have enough time to go on to any deeper topics. So I would love to thank you both for your time. Jeremy Tan from Liquid and Jeffrey Goh from now Grablink. Thank you for joining us. I learned a lot myself. It was a great pleasure to have you.
Thank you for having us.
Thank you.
Thank you.
Thanks, Joel.
Thanks.
Thank you.